Hello and welcome to Edison TV. Today I'm joined by Greg Smith, Chief Executive Officer of IP Group. IP Group are a UK listed investor in science-based companies across clean tech, deep tech and life sciences. Greg, thanks for joining me again.
Good to see you again, Dan. Thanks for having us.
So there have been several announcements regarding the technical and commercial progress across the portfolio recently. A particular highlight there was FISA's acquisition of Metsera. Can you explain the importance of that transaction?
Yeah, so this is something that we highlighted in the half-year results for the first time. We haven't typically talked a lot about the licensing side of IP Group's business, mainly because for the past few years it's contributed sort of a few $100,000 of income to the group. And one of the transactions this year that was quite interesting was the IPO of a business called Metsera, which has got a novel GLP-1, so one of the anti-obesity drugs, that was progressing through into phase 2. And they IPO, they raised a few $100 million. And so obviously we were quite interested because we licensed the fundamental technology behind their lead program and a number of their other programs to them on sort of interesting commercial terms. The fact that they had raised a few $100 million by way of IPOs gave them the firepower to be able to develop that compound, which was big news. And at the time that we announced the results, we flagged this to shareholders. And then a week after the results, it was announced that FISA was acquiring the business for 4.9 billion cash up front, plus another couple of billion in milestones. And so I think that, to us, really sort of highlighted the degree to which there could be some really significant potential value here.
And this could be very significant, couldn't it? We've actually just produced a report on this, but just to check the figures. So the consensus estimates are for the Met97 drug to generate around 9.2 billion of revenue by 2030. And if we take a royalty of that of 1%, which I think is a baseline, that would imply that it could be generating around 90 million plus of annualized royalties for IP Group. So if that's right, that could be a game changer, couldn't it?
Yeah, I mean, we're quite excited by the news. We haven't put any financial information out there other than what we included in our RNS, but to say we do benefit from a low single-digit royalty. I think, as always, your analyst is close to the pulse and has picked up the scale of potential revenues that could come from the compound if it successfully gets through phase 2 and phase 3 and into the market. But yes, I mean, if those numbers come to fruition, and that's just from the one lead compound, it's worth noting that we've got IP over a number of compounds that they're developing. So yeah, we're watching it significant. And I think from your viewers' point of view, it's worth noting that this isn't something which is reflected in our NAV or our NAV per share. So I think that the total value in our books at the half year was about 1.2 million or 1.5 million or something. It's a very small amount. So over the course of the next 6 months, as hopefully the compound progresses through clinical trials, we will provide some further financial information. And already the analysts that cover us, Milos included, have started to give some indications of what the value could be for the group. But I think it's fair to say it could be quite significant for us, which would be great news for shareholders.
Yeah, obviously, so we need to discount that back, but equally it's not fully in your NAV at the moment. So one of the notable messages in your H1 results was the continued focus on delivering exits and that 250 million exit target by, I think, year end 27. Can you discuss that and in particular what's driving that confidence in hitting that target?
Yeah, thanks for picking that one up. That was one we thought it was important to set out a sort of a longer term ambition for the amount of cash we could realise from the portfolio, and 250 million in cash is quite a meaningful proportion of our sort of 500 million-ish market cap at the moment. So we're quite ambitious on this, but it wasn't with unfounded confidence. And I think the recent announcement of the acquisition of one of our portfolio companies in the AI space, Monolith, to CoreWeave, one of the very big US Nasdaq listed businesses operating in that space, is hopefully a flavour of why we feel confident. another transaction during the course of the first half of the year, which I haven't spoken about for a long while, was an IPO of one of our businesses. We were very pleased for Dan and Gabe and the team that they had a successful IPO of Hinge Health on the New York Stock Exchange. That's a business that we backed right from the very beginning with our first investment was about £50,000 or something in the business. And we're already at the point, having taken a bit of cash off at the point of the IPO, of having made a 50x type return on the amount that we invested. We invested almost $1 million in the business. So that's very interesting. It's trading well in the aftermarket. And our remaining balance, which was about £40 million of value, or about 4 or 5p per share, as at the half year, is currently under lockup. But of course, it offers some opportunities for liquidity in the second half of the year and beyond. And there are other opportunities within the portfolio for realizations, and that's why we've got the confidence in saying that we can achieve that 250 million at least outside of our holding in Oxford Nanopore by the end of 2027.
And that 250 equates to around about half your current market capitalization, right? Looking outside of exits, are there any other particular things going on in the portfolio that we should be aware of?
Yeah, I mean, the balance we've had to strike over the last couple of years is the return of capital to shareholders from exits and the reinvestment in the portfolio. And though the exits that we've had to date have enabled us to retire about 15% of our shares in issue over the course of the last couple of years, so it's made quite a meaningful difference, and hopefully will sort of supercharge the returns available to shareholders in the future. And then, of course, the focus a little bit of management is now shifting to that medium to long term opportunity and what we're investing in to deliver the returns of the future. There's lots to be excited about in the portfolio. We've had a capital markets event in the last couple of months, and we had a few of our really interesting companies presenting. There's some content on YouTube that people can watch. Genomics PLC, I would particularly draw attention to. That's a business that's using some AI and machine learning to do data analysis around the genetic code of humans. Lots of samples, and what it does is, rather than looking for very niche diseases, it's giving people a what's called a polygenic risk score that ranks how likely you are to get very well-known diseases like diabetes or cardiovascular disease. And of course, those diseases, if picked up early, can be treated very effectively. And so this is really interesting and as a concept. And I think over the last year or two, they're starting to show evidence of hitting that hockey curve of revenue. So that's very interesting. And then another one I draw out is a sustainable airline fuel business. So as you probably know, there's a huge amount of regulatory pressure to bring some sustainable airline fuel into the mix of fuels used by airlines. It's a huge contributor to the climate emissions. And a business called OxCCU, which is an Oxford spin-out, just recently completed a Series B financing that we were a significant contributor to, alongside people like International Airlines Group, the parent company of British Airways, and a number of major players in the fuel space. So that's another one which looks really interesting. And if you happen to be passing Oxford Airfield, you can see a big OxCCU facility where they're producing SAF from sort of carbon dioxide in the air over a novel catalyst. So it's sort of another great example of some future value.
I was lucky enough to meet a couple of those companies at your recent event, both fascinating, really exciting opportunities. Moving on a bit, can we discuss discussions about securing third-party capital?
Yeah, I would say the whole, the sort of opportunity in the UK that was brought about, and particularly had a light shone on it by the Mansion House Compact and then the Mansion House Accord. That has sort of brought about 2-3 years worth of discussions. I would say the discussions we're having with sort of potential funders has moved from very high level conceptual to, in a small number of cases, much more practical and how might we construct a portfolio and how could that look in terms of investing into some of our portfolio businesses. I said at the time of the half year results that we would be confident in having announced a new mandate by the time of the full year results, and stand by that commitment. And IP Group's been very lucky. We benefited from investment from a number of the leading pension funds in the UK over our history. Railpen is our largest shareholder, one of the most active DB schemes in the country, and Phoenix provide our debt, one of the biggest DC providers. So I think the confidence that we've got already, some big pension fund financial partners, is also enabling us to have some quite constructive conversations with others. So yeah, look out for that one between now and the full year results.
Interesting. And we can't have an interview without talking about AI. A lot going on in that area across the board, but we've recently had NVIDIA's chief exec visiting the UK, and in particular highlighting a number of companies in your portfolio. Can you discuss that?
Yeah, I mean, it's good for the UK to have that sort of profile and recognition around our AI and technology opportunities. And from an IP Group point of view, a number of our portfolio companies were lucky enough to have engagement with Jensen. He visited one of our AI software businesses, Oxa, and there's plenty of content on LinkedIn. He was also generous enough to say we've got one of our quantum businesses, Oxford Quantum Circuits. He said this business will be the next NVIDIA, which of course is quite a good endorsement from Jensen. So it's good to get the kind of the profile and the recognition. It's also worth saying there was a business envoy that went down to India with a number of technology businesses. Many of our companies were represented there as well, both current and past. So Ceres Power, which was a very successful business that we had from the portfolio of old, and Oxford Nanopore were going, and again, just good to see the scale of opportunity being reflected in some of these sort of international events. So yeah, no, we look forward with confidence, and I think with the NAV per share returning to hopefully positive growth, there's a lot to look forward to.
Certainly seems as if there's a lot of really interesting things going on. Greg, many thanks for joining me today.
Thanks, Dan.